Hey, Peter here from How to Invest HQ, and I wanted to put together a quick video and post on Zillow. This is one of the stocks held by the How to Invest HQ portfolio, and it's up over 40% in the last 3 months. So the question we have to ask ourselves is it overvalued? And should we take profits, or do we keep holding at this point? And in this video, I'm going to share why I'm actually going to hold, even though I think Zillow is expensive. So if we're looking at the numbers, Zillow is extremely expensive right now. There's no other way to put it. Their current market cap is $4.68 billion. Their fiscal year revenue guidance, that's not current past 4 quarters, but they're projecting for the rest of 2014 will be a total of $306 million. That makes their price to sales over 15 times their guidance, which is high, especially for a profitless company. These great growth stocks typically only can expect a max of 10 times revenue. That's what a lot of aggressive growth stock investors would put as their limit. If you're going over 10 times, you're not being disciplined, so on and so forth. But I think Zillow's growth is typically fast, and even faster than anyone thinks right now. Zillow's guidance was readjusted twice in a row now, once at the end of their fiscal year 2013, and then again during their Q1 fiscal 2014 report. And since then, their traffic has only increased. If you're looking at this Alexa chart, which is Alexa's a service that estimates web traffic, Zillow's traffic is just a straight line up. And it doesn't show any signs of not improving further. And when we're looking at this chart, understand that every day that goes by, more people use the internet than the day before. Our lives are becoming increasingly reliant on the internet. More people are getting broadband, and more people are getting smartphones. So when a website's moving up in in Alexa rankings, it's not just growing, it's growing faster than everyone else because everyone in this space is growing. So Zillow's moved since the start of 2013 down here. They were not in the top 400 sites in the world, and they were about 100, they were they were about the 100th or so most popular site in the United States. In the last 18 months, suddenly they're now the 38th most popular site. To give you an idea, back in January, right here, they were 56. So in the last 5 months, they've gone from 56 to 38. That's an incredible climb. And they've gone from outside the top 200 to as high as 193, and it looks like they're peaking at 175. So they're growing very fast and faster than expected, and this growth rate continues to accelerate. And historically, traffic's peaked around June, and we're not June and July, and we're not quite there yet on this chart. Alexa's data is about a month behind. They need to crunch the numbers before they can actually display. So, it's the important thing here is when we're looking at that chart, rankings here are not a zero-sum game. If you just maintain your ranking, you're still growing because everyone's growing in this space. So when you're moving up, you're growing faster than already fast-growing companies. So amount of growth here is incredible. And I think that part of this is not just due to Zillow being a strong company, but I think real estate in general is doing better than people realize. And I think we're at the start. This year has been really good for real estate, and I feel like the market's just been slow to catch on because people have been saying, real estate's recovering, it's recovering. Well, it's been recovering since 2008. It's a long time to recover to not be back to where it was before the bubble, while the stock market is back where it was and even higher than it was before the crash. So I think that we're finally starting to see this big turnaround in the real estate market, and I'm saying this because we're seeing all housing-based websites do well. Trulio, which is a competitor to Zillow, is also posting good traffic, even though they're not doing as well as Zillow. They're not the best in the space. And even Home Depot are seeing, better than expected traffic. And Home Depot's not, an exciting temp company, but more people are on their website than they were last year at this time. A lot more people. And that's because people are interested in houses. And with Zillow, which is dominating a now growing space, it's my favorite type of long-term investment. I'm on board with Zillow, and I'm not going to look to sell until we get a lot more upward movement. Maybe if we start seeing like $130 or $140 a share within the very near future, I might discuss selling then. But, if we're talking next year, I'm probably not going to sell at 130 or 140 if it's a year from now. And what we are seeing, though, is, this increasing growth in traffic, and I think that's going to drive this share price up. So I'm still long Zillow, and I hope you are too. Hope this video is helpful for you, and go ahead and subscribe for more stock videos.